Good afternoon, ladies and gentlemen. A very warm welcome to the Q4 and FY26 earnings call of Madhya Bharat Agro Products Limited. From the senior management, we have with us today Mr. Pankaj Oswal, Managing Director, Mr. Saurabh Gupta, Chief Financial Officer, Mr. Gaurav Ranka, Chief Accounting Officer, Mr. Pokhraj Kanther, Group Financial Advisor. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during this conference, please signal for an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference call is being recorded. I now hand the conference over to Mr. Saurabh Gupta. Thank you, and over to you, sir.
Thank you, Farah. Good afternoon, everyone, and welcome to the earnings call for Madhya Bharat Agro Products Limited. Before we begin the earnings call, I would like to mention that some of the statements made during today's call might be forward-looking in nature and hence it may involve risks and uncertainties, including those related to the financial and operating performances. Please bear with us if there is call drop during the course of conference call. We would ensure the call is reconnected soonest. I would like to hand over the conference to Mr. Pankaj Oswal, Managing Director. Over to you, sir.
Good afternoon, everyone, and thank you for joining us today. On behalf of the board and the entire NBAPL family, I welcome you to our Q4 and full year FY26 earnings call. FY26 has been a year of meaningful transformation, not just in financial performance, but in how we position ourselves within India's evolving agriculture ecosystem. Across the fertilizer sector, the year was marked by strong domestic production, a more streamlined subsidy framework, and a continued structural shift towards balanced nutrition and usage. Early developments in green ammonia also signal the beginning of a transition towards more sustainable input sourcing. These trends align closely with NBAPL's integrated strategy and strengthen our positioning for the future. Let me start with a brief overview of the industry and then walk you through our performance, key milestones, and outlook before opening the floor for questions. Industry overview, Rabi season and operational environment, domestic production and supply adequacy. India's fertilizer production remained strong through Q4 FY26. Driven by policy support and operational depth. The quarter witnessed stable dynamics during the Rabi season, with peak activity concentrated in January and February, a period that saw PAMK production reach approximately 15.76 lakh metric tons, marking one of the highest monthly output levels on record. This momentum continued in March 26. Domestic production remained steady despite the typical seasonal dip in demand as key Rabi crops like wheat and mustard reached maturity. In the first 3 weeks of March alone, DAP and NPK production reached 7.62 lakh metric tons, while SSP contributed another 3.06 lakh metric tons. These figures highlight an industry maintaining strong operational depth even against seasonal headwinds. Input cost, environment, and feedstock trends. The fertilizer sector is currently navigating a period of unstable and supply chain disruption arising from Southwest Asia disturbance. This has led to the direct impact on the escalation of raw material input costs that includes natural gas and ammonia apart from others. DAP prices remained elevated due to the tight global supply, while MOP prices were relatively stable, supporting NPK economics. From our perspective, this mix was manageable given our product portfolio and sourcing strategy. Sulfur, which is a key input for SSP, and phosphoric acid saw a sharp increase during FY26. Moving from $100 in FY24 to almost $700 per metric ton. This remained a cost pressure for phosphatic fertilizer manufacturers. However, given our integrated setup and captive sulfuric acid capacity, we were relatively better placed to curb down this impact. Rock phosphate prices remained stable during the year, which provided some support to overall inputs. Policy architecture. Stable, responsive, farmer-centric. India's fertilizer policy framework continues to remain supportive for the industry. The nutrient-based subsidy regime, now covering 28 grades compared to 22 earlier, has helped improve flexibility in product mix, while keeping fertilizers affordable for farmers. The overall subsidy outlay for FY26 was increased to rupees 1.86 lakh crore, reinforcing the government's continued focus on the sector. From our perspective, this policy stability provides a strong operating environment and supports demand visibility going forward. Structural market trends, a shift in nutrient logic. We are clearly seeing a shift in India's fertilizer consumption pattern. Increasing awareness around balanced nutrition use are driving demand towards NPK complexes and SSP. NPK production grew by 18.6% in FY25, while SSP also saw a strong growth in both production and sales. This indicates a gradual move towards more balanced crop nutrition. For NBAPL, this is a positive trend as it aligns well with our product portfolios and integrated strategy. Green ammonia, the structural transformation of Indian fertilizer. One of the key developments this year has been the progress on green ammonia under the National Green Hydrogen Mission. Under SECI site program, most of the planned auctions have now been completed, covering a significant part of targeted capacity across fertilizer plants. Importantly, the price discovery has been encouraging. The lowest price discovered is around 49.75 rupees per kg, which is now much lower to grey ammonia levels than earlier expectations. The green ammonia is becoming commercially viable in the Indian context. For the industry, these long-term contracts provide better visibility on a critical input. For us, it is an important step towards securing our future feedstock requirements with greater cost stability. Having outlined the industry development, I will now cover our financial performance for the Q4 and full year FY26. Quarter performance as Q4 FY26. The company delivered a resilient quarter in Q4 FY26. Revenue from operations stood at rupees 394.7 crore, up 33% YOY, supported by healthy volumes aligned with the robust Rabi season demand and stable product realizations. EBITDA stood at rupees 41.2 crore, up 14% YOY, reflecting disciplined cost management and operating leverage even as feedstock costs intensified in the later half of the quarter. Profit after tax stood at rupees 59.8 crore, up 318.2% YOY. Earnings per share for the quarter stood at rupees 6.82. Full year performance FY26. For the full year FY26, NBAPL delivered record high performance across all key metrics. All-time high revenue from operations stood at rupees 1867 crore, up 76% YOY, driven by volume growth and steady demand across our product portfolio. Highest ever EBITDA stood at rupees 227 crore, up 55% YOY, supported by operational efficiency, a favorable product mix, and our backward integration advantage. Record high profit after tax stood at rupees 150 crore, up 161% YOY, and earnings per share stood at rupees 17.14, driven by tax benefits along with improved operational efficiency. Now moving to operational performance. Q4 FY26. Strong fertilizer production for the quarter stood at 1,16,281 metric tons and healthy sales stood at 99,146 metric tons. SSP utilization stood at a robust 99%, while NPK utilization remained healthy at 95%. Our plants demonstrated consistent throughput despite the challenging input environment, a testament to our supply chain agility and operational discipline. Full year FY26. For FY26, record high production stood at 4,75,154 metric tons and sales at 4,72,270 metric tons. SSP utilization reached a record high of 98%, while NPK DAP fertilizer operated at a peak capacity utilization of 100%, reflecting strong market acceptance and efficient plant operations. We enter FY27.
Mr. Oswal, we are not able to hear you. Participants, please hold. The line's been disconnected. We'll just try and call them back. We have the management line reconnected.
Yes. So I will start with full year FY26. For FY26, record high production stood at 4,75,154 metric ton and sales at 4,72,270 metric ton. SSP utilization reached a record high of 98%, while NPK DAP fertilizer operated at peak capacity utilization of 100%, reflecting strong market acceptance and efficient plant operations. We enter FY27 with our facilities well calibrated with new capacities and our team's experience in navigating supply volatility. Strategic expansion. Building tomorrow's capacity today. Dhule project based at Maharashtra, integrated platform. Our Dhule integrated manufacturing platform represents NBAPL's next phase of growth. In the early commissioning phase, we have already operationalized 330,000 metric ton per annum of SSP fertilizer capacity and 198,000 metric ton per annum of sulfuric acid, delivered ahead of schedule. This is not just a milestone, it is a proof point of execution quality. Our fully integrated DAP and NPK fertilizer facility at Dhule with 330,000 metric ton per annum NPK and 99,000 metric ton per annum phosphoric acid is progressing as planned, with commissioning targeted before October 2026. This backward integrated into phosphoric and sulfuric acid positions us to control our cost curve in a volatile raw material environment. Next phase, which will scale up to an additional 330,000 metric ton per annum of DAP and NPK fertilizer, 66,000 metric ton per annum of phosphoric acid, and 396,000 metric ton per annum of sulfuric acid is targeted for commissioning by October 2027. The strategic intent is clear. We are building an integrated phosphoric manufacturing complex that will be structurally insulated from import dependency. Sagar, Madhya Pradesh, commissioned and contributing. At our Sagar facility, the 90,000 metric ton per annum DAP NPK expansion and 165,000 metric ton per annum sulfuric acid capacity have been successfully commissioned in March 2026. This facility strengthens our market presence and enhances our route to farmer in central area. Overall, we have significantly scaled our capacities during the year. Our SSP capacity now stands at 570,000 metric ton per annum and NPK DAP fertilizer at 330,000 metric ton per annum, taking our total fertilizer capacity to 9 lakh metric ton per annum. On the backward integration front, sulfuric acid capacity stands at 528,000 metric ton per annum, with total intermediate capacity at 786,000 metric ton per annum. With the ongoing expansion, we are targeting to scale our total fertilizer capacity to 1.56 million metric ton per annum by FY28, significantly enhancing our growth visibility, sustainability and credit recognition. Green ammonia, long-term supply security. MBAPL has entered into a long-term green ammonia procurement agreement under the National Green Hydrogen Mission for 130,000 metric ton per annum. This is a strategic decision on multiple dimensions. It reduces our dependence on imported grey ammonia, which currently costs approximately $750 per metric ton and is subject to geopolitical disruption. It provides 10-year price visibility through SECI's fixed rate contract structure, and it positions MBAPL as an early mover in India's agricultural decarbonization journey. As green ammonia prices coverage towards green ammonia parity improves commercial viability and positioning green ammonia as a sustainable and economically feasible input over time. Credit rating upgrade, A+ stable. We are pleased to report that CRISIL and ICRA have upgraded MBAPL's credit rating to A+ stable during the year. This reflects the rating agency's recognition of our improved financial strength, expanding asset base, disciplined balance sheet management, and the strategic logic of our integrated growth model. A stronger rating translates into better financing terms for our program and reaffirms the confidence of our lenders, customers, and partners in NBAPL's trajectory. Outlook FY27 and beyond. As we look ahead to FY27, the industry stands at an inflection point, navigating a landscape shaped equally by structural opportunity and evolving challenges. The demand foundation remains compelling. India's fertilizer consumption in FY26 approached 680 lakh metric tons, sustaining the sector's multi-year growth trajectory underpinned by 140 plus million farming households and MSP support that continues to provide stable rural liquidity and confidence in agricultural productivity. A favorable monsoon outlook further reinforces a constructive kharif demand environment. At the same time, input cost volatility, subsidies, disbursement timelines, global supply dynamics, and monsoon variability remains key monitorable and have been factored into our planning assumptions. Against this backdrop, NBAPL is strategically positioned to capitalize on these opportunities through focused execution across key growth levers, capacity expansion and exponential growth. Phase 1 of the Dhule facility has been partially commissioned with backward integration alongside the completed expansion at the Sagar unit. The balance phase 1 capacity at the Dhule facility is expected to be commissioned before October 2026. These phase integrated expansions is expected to generate 100% revenue growth over the current baseline. This will be followed by a further phase of expansion by October 2027, resulting in an additional 25% revenue upside. These phase expansions supported by backward integration are expected to enhance operational efficiency and provide strong medium-term volume and profitability visibility. Scaling towards leadership position. With ongoing expansions, today total capacity is expected to increase from 9 lakh metric ton per annum to 1.56 million metric ton per annum, supporting the company's vision to become India's third largest private sector phosphatic fertilizer company. Capital strength supporting growth. The company's upgraded credit rating strengthens its access to capital markets, supporting funding requirements for ongoing and planned capacity expansion. Green ammonia initiative. The company has entered into an agreement for green ammonia and expected to commence after 3 years, strengthening input security while aligning with long-term sustainability and cost optimization objectives. Geographical diversification. With new capacities coming on stream, the company is strengthening its presence in high-growth southern markets and plans to establish a dedicated marketing office to enhance distribution reach and demand capture. In this context, the combination of favorable demand dynamics, policy support, expected restrained supply of imported fertilizer due to war, and NBAPL's ongoing capacity expansions, backward integration, and a strategic initiative positions the company primed to deliver sustainable growth while maintaining resilience against sectoral volatility. Closing remarks. Ladies and gentlemen, NBAPL is a company in purposeful motion. We are scaling intelligently, integrating vertically, decarbonizing proactively, and earning the trust of our financial stakeholders through consistent execution. India's agriculture story is one of the most durable long-term growth narratives in the world. We are honored to be part of it and determined to be one of the best-run participants. On behalf of the entire NBAPL team, I thank you for your continued confidence and partnership. We now open the floor for your questions.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may enter star followed by 1 on their touchtone telephones. If you wish to remove yourself from the queue, you may enter star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may enter star and one on the touchtone telephones. The first question is from the line of Nishita from Crown Capital. Please go ahead.
Yes, hello.
Yes.
Yeah, congratulations on a very good set of numbers. I just had a question on the revenue growth that you just mentioned. So you mentioned that from the partial phase one capacity expansion that we've already done, like that is already commissioned, we can expect 100% of revenue growth. So I am assuming that is going to be on the full capacity utilization. So how fast can we ramp up that capacity utilization? Like, can we see this growth in FY27?
See, the SSP fertilizer plant is already commissioned and it is already on in FY26 in the last part of March. And there are some due government compliances which are being taken care of, and it is supposed to be starting in another 2 months. 2 months commercial production it is going to start. Sale of fertilizer will start in 2 months, and the DAP NPK fertilizer is supposed to start before October 26. So what we can expect is this year it will be it can be around 60% of the total capacities which we are putting up, and then further next year we can say that it could be around that 75-80 or around 80%.
Okay, understood. So like, what is the growth that we can expect this year, overall growth?
As we have already spoken, during the current year we expect a growth of 50 to 60% and another growth of next FY28 when the full benefit of the full expansion will be available. So at that time the growth rate as on FY26 will be more than 250%, you can say 200%.
So in FY28, we can have more than 200% growth.
From FY26.
Okay, so the baseline of FY26, we can expect a 200% growth in FY28.
In FY28, yes.
Right. Okay, understood. And my next question would be on the capex amount that is required for this whole capex that we are doing in the Dhule plant. What is the total capex?
See, already Dhule expansion, Dhule project has fully been funded. Financial closure has been achieved, and term loans have started disbursing. Our margin contribution, we are confident that through these internal accruals and the coming 6 month accruals, we will be able to meet. So as far as the current ongoing expansion is concerned, we are fully financially closed and there should not be any issue. But as regards the second expansion, which our MD has spoken about, which we are yet to undertake, it is still under process, and we will be able to give you the full details only after this operational commercialization starts producing results. So maybe in the month of October, November, we will be able to undertake that exercise.
Okay, understood. And my next question was on margins. So, in Q3 and Q4, our EBITDA margins were around 10%, and like in Q1, it was around 13%. So, is there any seasonality that we see in our business? So, like the first half, we experience more margins than the second half. Is there any seasonality?
In fact, the last quarter, because of the rise in input costs, there has been some pressure, so the EBITDA margin has been low. But going forward, there are certain positive factors which particularly phosphatic fertilizer industries are witnessing. Number one, the supply of raw material is not going to be affected except that ammonia, which we procure from domestic suppliers. For ammonia, the domestic urea manufacturers who have been restored full base supply are expected to give adequate ammonia to us. As far as the question of pricing is concerned, the government of India has already directed all the urea manufacturers to quote reasonable rates for ammonia. Another point is, during this current quarter, all the fertilizer manufacturers, taking into account the increased NBS subsidy, we have increased the MRP, which will be further reviewed in next 1 to 2 months. So, put together all these factors where raw material supply is ensured, costing, whatever has increased is going to be curtailed, MRP going up, NBS subsidy increased by government, further government support. We hope that this whatever situation we have seen in the past or the war situation, it will be a blessing in disguise, and we should be in position to show you a better result with new capacities coming into operations.
Okay. So, there's no seasonality because of which the margins have fallen. It's just the outside factors and the raw material cost because of which it's low, right?
No. Whatever seasonality has been there for the decades, it will be there. Nothing new.
Okay. So, what are the sustainable margins that we can expect?
We will be able to maintain the margin. That is what I have told you. We will be able to maintain margin. And if there is any deficiency is occurred on account of the raw material input prices, we will adjust the same with increase in MRP.
Okay. So, can we maintain the margins around 14%?
Yes. 14%, percentage-wise, I think it will not be fair to tell that 14%. But absolute terms per metric ton will be able to maintain the margin.
Okay, understood. Thank you so much. That is it from me, sir.
Thank you. Participants with questions may enter star and 1 on the touchtone telephones. The next question is from the line of Jainan Gilani from Swan Investments. Please go ahead.
Hi, sir. Thank you for this opportunity. So, as you mentioned to the earlier participant that you expect the EBITDA per ton to be sustainable. So, what is the EBITDA per ton target that you are expecting could be sustainable by FY28?
By 28?
Yes, the
For
EBITDA.
27.
Sorry, for 27 and 28 if possible.
28, I think it is too early for fertilizer industries going by the present geopolitical position to forecast about 28. But 27, as I told you, we will be able to maintain per metric ton EBITDA in 27 also.
So, what could be the absolute EBITDA per ton that you would maintain in 27?
It will be in the range of 6,000 rupees for NPK.
6,000 for NPK. And what about SSP?
SSP will be in the range of 1,800.
Okay. And sir, sorry, just to clarify that to the earlier participant, you mentioned that we can expect revenues of almost 4,000 crores by FY28. Is that right?
Absolutely correct. Yes.
Okay, done. That's it from my side. Thank you.
Thank you. The next question is from the line of Avnish Tiwari from Vaikarya Change LLP. Please go ahead.
Hi. Can you explain this oil and gas shock which has happened? How has it flown through your business, either in terms of volume, raw material, just an experience of how are you managing it, and where are you seeing changes in the prices you have to take or volume impact in your business?
See, basically, there are 3 nutrients, N, P, K, and N comes from this ammonia, and ammonia is coming from natural gas. So natural gas is being imported into India. So one point is clear that when this oil and natural gas are impacted, this ultimately impacts the cost of ammonia. So the cost of ammonia has increased due to the natural gas prices, and which is already impacted down the line from all these Middle East countries. One part is this. And the other part is that we being a complex fertilizer manufacturer, DAP and NPK fertilizer manufacturer, we buy ammonia from urea manufacturers, because what happens is there is a ammonia excess availability is there in urea manufacturing units. The ammonia prices have increased for our units also, and but as already explained, due to this government initiative and the hurdles from the imports and the other initiatives taken from the industries has increased, the MRP has increased. So all these cost impacts of ammonia or sulfuric acid or sulfur have been taken care of, and as such there is no impact on the EBITDA or the profitability.
Right. How much has ammonia increased, and how much have you increased the prices of your products?
See, ammonia has increased. Ammonia prices have gone up by it has gone up by almost 40,000 rupees per metric ton. So it's 45,000 to
45,000 rupees per ton.
Yes.
Okay. And we have increased our MRP by 50%.
Okay. So this increase of 60% in MRP, does it make up for all of this 45,000, or you end up making some profit also?
Subsidy component has also been increased by government.
Okay. So including subsidy component increase and your MRP increase of 60%, does it cover all the raw material cost increase, or you have extra profit also on that?
No, it covers.
No extra profit, but cost has been covered.
So, okay, great. And this, you said that this crisis could be blessing in disguise also for you as we look forward, maybe some time ahead. Can you explain what would you look out for, which can be positive for you, let's say, sometime down the line?
See, what happens is, particularly this Iran and this part, they were supplying fertilizers to India, and the raw material comes from the other side, Egypt, Jordan, Morocco, and all those parts. So only this finished fertilizer part is affected. So what is happening is this finished fertilizer is coming less into India. So ultimately, the domestic manufacturing units in India are in a position to produce maximum. In any case, Indian manufacturers produce maximum because the country is dependent on foreign fertilizers. So it gives an Indian manufacturer to produce maximum and get better revenue. This is one part. The second part is the government is already working out various types of initiatives to help the Indian manufacturers remain in reasonable profit. And the other part which is being scattered is that industry has already started increasing the prices, which in turn will cover the increased cost of the raw material.
Right. Is the industry increasing the prices the same? You also have increased the prices, right? You are also part of the same industry.
Yes.
Lastly, if you were to look back in 2022, when Russia-Ukraine war happened, how...
Please repeat.
In 2022, we also had an oil and gas shock when Russia-Ukraine war happened. What were the things which were different that time versus now? What did you experience that time? If you can explain.
That year also has been blessing in disguise. We reported the best results.
And was it similar to this time that where you were facing increase in raw?
No, not exactly. This time, because of the Iran-Israel war, this belt of Gulf countries who supplies maximum phosphatic or other fertilizer and also other material. So this time it is more affected than as compared to Russia or Ukraine war.
Okay. But in terms of fertilizer supplies globally getting reduced, that was similar phenomena which you are experiencing this time?
No, global fertilizer supply has, in our case, the import may be some restraint or there may be some issue in import of these phosphatics and urea fertilizer. So it can affect, because demand is maintained, demand will be more. So the pressure for supply from domestic manufacturing will be more. So that is why I have been telling you, this is going to be a blessing in disguise. We will be produced to the extent of maximum, we will be able to sell without any problem. And with this MRP increase, MPS subsidy, raw material rock not going to be hindered because it comes from Jordan. Ammonia supply being regulated by government of India. We hope that we should be able to give you very good results.
Great. And is your raw material supply anyway affected in terms of volumes? I know prices have gone up, but in terms of volume, are you getting as much volume as you want because it's coming from Egypt, Jordan, Morocco, or there is some degree of volume shortage on raw material side?
No, we are getting appropriate quantities. That is not an issue.
That is not an issue. Great. Thank you.
Thank you.
Thank you. The next question is from the line of Keshav Sharma, an individual investor. Please go ahead. Mr. Sharma, your line is unmuted. You may go ahead and ask your question.
Hi, good evening. Thanks for opportunity. You mentioned a target to become India's third largest private sector phosphate fertilizer company. What is the current ranking and who are the top two?
Right now, Coromandel and Paradeep are the top two, and they could be around on the 5th or 6th position. But after this, all expansions being completed, and then we will be manufacturing almost more than 1.5 million ton of fertilizer. Then we rank to be on the third position in private sector.
Okay. Thank you.
Thank you. Our next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Sir, congratulations on good set of numbers and thank you for the opportunity. So for my first question is, I just wanted to understand, the prices of sulfur and sulfuric acid, the average price for Q4 and what is the price in right now? I'm in the month of April. If you could provide per kg, what is the trend?
Prices of sulfur last quarter?
Last quarter में approx 55,000.
Last quarter it was around 55,000. Now it is around 70,000 rupees per ton.
And sulfuric acid?
Practically, sulfuric acid comes from sulfur and the refined and the smelters. So smelters have their own prices, but from sulfur it is around 15,000, which has increased to around 22,000. 20,000.
15,000 was the price last quarter and 20,000 is now,
yes.
Is what you are saying, right?
Yes. Approximate number.
Right. Perfect. Yeah, that's all from my side, sir. Thank you.
Thank you very much.
Thank you. Participants with questions, you may enter star followed by 1 on your handset. The next question is from the line of Anupam Agarwal from Lucky Investments. Please go ahead.
Thank you so much for taking my question and congratulations on great numbers, sir. My question is, sir, if you can elaborate more on the green ammonia project with the government. It's a 10-year contract. By when are we looking to put capex for that? How much would that be? When are we looking to commence the project? What is the kind of incentive structure that is in place? If you can just maybe elaborate a little bit, please.
See, we have done the buying contract with the government agency known as SECI, right? And we are not putting that green ammonia project. The green ammonia project is put by another player which is in contract with SECI. So there is another company who will put the green ammonia project, sell it to SECI at a price, and SECI will sell us at certain price. So there is no capex involvement from our side. It is only that the contract says that we will be able to receive this 1,20,000 tons of green ammonia at both of the plants at a fixed price for 10 years, and which can be renewed after 10 years.
Understood. And when is this going to start commencing?
In another 3 years. And the quantity is not 1,20,000, the quantity is 1,30,000 tons.
30,000. Okay.
April 29, we expect the supply from green.
April 29. Okay.
And the pricing wise, it is an upper price has been fixed. In case green ammonia goes down, gray ammonia goes down, we will be charged the rate equivalent to gray ammonia.
Okay. If I may ask, sir, what is the price that we have signed the contract about?
53,000 rupees per metric ton.
53,000 for 10 years.
Delivered at our factory site.
And this includes the incentives, sir, or it does not include the incentives?
No, in case gray ammonia means the ammonia produced from natural gas, it's available lesser than 53,000 in market, then we got this green ammonia at lesser price. At currently, that ammonia producing from natural gas is around 90,000. In that case, we also get this green ammonia at 53,000 rupees per metric ton. The upper price is capped and the lower price is not capped. Whichever price is low, whether it is gray ammonia or green ammonia, charged by us.
But so the production process will have a different route for manufacturing, right? It may not be...
Yeah. Production process is completely natural.
And the difference is...
So whether we use green ammonia or the gray does not matter, or?
No. It is ammonia.
Okay. What technology do we use, sir?
See, I told you that we will not be into manufacturing.
For us, it is the same ammonia. The process is different. One is produced by natural gas, another will be produced by solar energy and air. So, different supplies are there. So the question of setting up or technology or how process, we are not concerned. We will get the ammonia from these players through government agency.
Understood. And then we'll convert to DAP NPK.
Yes. That process is same.
Understood. Got it, sir. Thank you so much for this.
Thank you.
The next question is from the line of Rishi Mehta, an individual investor. Please go ahead.
Hello. Sir, my question is, what is the total capex outlay for the Dhule platform across phase 1 and phase 2?
See, the total project cost is 675 crores, which includes our father project. And the present expenditure has been made to the tune of 460 crores. The balance project, the cost will be incurred in another 3-4 months.
Okay. Another question is, the Dhule DAP or NPK facility is targeted for October 26 commissioning. What are the key risks to this timeline?
Nothing. We hope to start even before October.
So there
going by the present state of work and going in progress, even SSP was also targeted to start from October. We started in April, and PK we targeted in October. We hope to start before that date.
Okay. Thank you, sir. All the best for the projects. Thank you.
Thank you very much.
Thank you. Ladies and gentlemen, if you have any questions at this time, you may enter star followed by 1 on your touchtone telephones. To ask a question, you may enter star and 1. We have a follow-up from the line of Avnish Tiwari from Vicaria Change LLC. Please go ahead.
Hi. This green ammonia, which is 50,000 rupees per ton, is capped. So grey ammonia price is much lower. Then do you pay 50,000 or you pay lower amount which is there on grey ammonia?
Lower amount. We will pay lower amount.
Lower amount. So and let's say the supply of this ammonia, green ammonia, would be at a certain cost which is not changing. So who is bearing that in terms of, let's say, in case it goes?
Government of India. Government of India.
Got it. So they are basically supporting the use of green ammonia and through their own.
Yes. This is between the manufacturer of green ammonia and government agency. They have to make the assessment.
Right. And you got 1,30,000 tied up, and other
1,30,000.
1,30,000, right?
1 lakh, yes.
Right. And who are the other fertilizer companies who have got this kind of sign up?
IFCO, Coromandel, Paradeep, Deepak Fertilizer. We are aware of these three players.
Out of 7 lakh, 3.5.
Around 7 lakh metric ton contract has been done, and we as a Ostwal group are the biggest with a tie-up of
2.5 lakh metric ton per annum.
2.5 lakh metric ton per annum.
Okay, so 1,30,000 here and 1,20,000 is in future or some other place?
In our other group company, Krishna Postal.
Okay, the group you have got 2.5 lakh. So 1,30,000 is in here, right?
Okay.
Yeah. Thank you.
Thank you.
Thank you. Participants with questions may enter star and 1 on your handsets. There appears to be no further questions. Management, shall we close the call?
Okay.
Would you like to add any closing comments?
Yes.
Thank you once again for joining us. If you have any further questions, please don't hesitate to reach out to our investor relations team. Thank you. Have a great day.
Thank you very much. On behalf of Madhya Bharat Agro Products Limited, that concludes this conference call. Thank you all for joining us, and you may now disconnect your lines. Thank you.